How did the Tax Cuts and Jobs Act affect tax withholding? Have you ever wondered how changes in tax laws can impact the money you take home each paycheck? The Tax Cuts and Jobs Act, passed in late 2017, made some big changes that affected tax withholding for many people. Let's break down what happened and how it might affect you. First off, the Tax Cuts and Jobs Act significantly increased the standard deduction. This means that a larger portion of your income is not subject to federal income tax. For many taxpayers, this change resulted in less tax needing to be withheld from their paychecks. Employers had to adjust their withholding tables to reflect these new rules, ensuring that the amounts taken out matched what people actually owed under the new law. Next, the Act lowered individual income tax rates across most brackets. This also led to a decrease in the amount of tax withheld from wages. If you work with banks or credit unions, they needed to consider these new rates when advising customers or managing payroll services. The goal was to avoid taking out too much money, which could leave you with less take-home pay than necessary. The Tax Cuts and Jobs Act also introduced new tax credits and modified existing ones. For instance, the child tax credit was expanded, which can lower the amount withheld for eligible taxpayers. Financial institutions that provide tax software had to update their systems to include these changes, ensuring that withholding calculations remained accurate. From a business perspective, the Act reduced the corporate tax rate from 35% to 21%. While this primarily impacts corporate tax payments, it can influence tax planning strategies within banks and credit unions. This may lead to different advice for customers regarding withholding and estimated tax payments. Additionally, smaller banks that are structured as pass-through entities gained access to a 20% deduction on qualified business income. This change can also affect how owners of such institutions plan their withholding or estimated tax payments. In practical terms, banks and credit unions play an important role in helping customers adjust their withholding to reflect these changes. They may offer tax withholding calculators or financial planning services. It is essential to ensure that your withholding is accurate to avoid penalties or large tax bills at the end of the year. The Tax Cuts and Jobs Act changed tax withholding by altering tax rates, increasing the standard deduction, and modifying credits. Financial institutions had to update their guidance and tools to help customers manage their tax liabilities effectively under the new law. Understanding these changes can help you make informed decisions about your finances and tax planning.